The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this third day of January, second trading day of the year, and another really volatile day. Yesterday, the Dow was down very sharply from the opening and then had a really good rally, then pulled back, rally to positive, then pulled back quite sharply, and then closed up. Then, of course, Apple comes out with this news. Apple is part of the Dow. Apple is part of the NDX 100. So all we can look at is what are the FX, what is working and what's not. That's what I said to subscribers. That's what we're trying to do here. We're trying to isolate the wheat from the chaff. We're trying to see which stocks are the weakest, which stocks are not necessarily the strongest, but which ones are holding up the best of all. Dow's down 443, had a low this morning at 23,176. I'm sorry, had a high of 23,176, trading right now at 22,901. The low is 22,668. So it's kind of in the middle of the range. You can see a little Roman candle we're looking at right now. We do still have one long position left. We'll see if that's going to be able to last in another couple of weeks. But in the meantime, what we're really looking at is look how well the technicals are compared to where they were at the low on the 26th of December, when the Dow was at 21,712. Down 19%. So I'm going to try to run these through really quickly because this is very important to get an overview. Got a lot of very good questions just all over the show, from emails, from the text, from the den. So let's go. The Dow needs, as far as I'm concerned, to be trading in the 23,450 or higher area. I would say pretty soon, within about a week. What is today? Today's Thursday. Let's go to Wednesday or Thursday of next week. Next week will be the first full trading day of the year. I'm looking towards seeing whether or not this 22,600 area is going to hold as key support, or whether even today we don't get a really strong bounce, but at least it holds fairly steady to come back a little bit. It's already come back quite a lot from over 600 points down to minus 436. I said to subscribers to my opening call, very comprehensive daily newsletter, I said that we want to see the Dow by 1:10, 10 minutes past 1 Eastern time this afternoon. That's in exactly an hour's time. About better than minus 220. I don't know if we can do that. Let's just quickly look at the E-mini, because the E-mini's been acting very well. E-mini pulled back. You see this V-shape pattern? Had a very nice recovery into the 9 o'clock area. It goes all the way to 2493.50. Then it plunges down to the low of 2447. And now it's trading, and then it has a rally in a V-shaped pattern all the way to the 2480. Was that 83? 2489 area. And now it's trading down at 2473, down 37. So this is going to be an important couple of hours, because if we see the Dow closing very poorly, with majority of the Dow areas, and then now, of course, the Dow is non-industrial anymore. It is more like a conglomerate. It has a little this and a little that. It has 5 financials. It has Home Depot. It has 2 pharmaceuticals. It has, you're everywhere. It has Cisco. Microsoft. You're looking at a real conglomerate. You've got Goldman Sachs. Go into the healthcare, United Healthcare. I mean, you name it. It's got utilities. It's got Verizon. I don't know, Safety Factor, Johnson & Johnson, Intel. So this is a real mix. TWDP, this is DuPont. DWDP. DuPont amalgamated with DuPont. So let me just check it out here. this is very interesting because if the Dow is able not to plunge over the next week and a half below the 21,712 area, DW, I know this so well. Oh, Dow DuPont. Also holding quite well. Look, the low of Dow DuPont was way down at the 48.89 area on the 26th, rallies up to the 55s, and it's trading right now at 53. I shouldn't say it's way up, but it's up. It's nicely up from the low. So I'm looking at this and I'm saying there are some very important things going on, and it has to do with the overbought sectors of the year, and that was the tech stock area, and that's really impacting the market very poorly. I'm thinking that somehow, some way, we don't take out that low in this particular time frame, but a little later on. We'll see. All right, let's get back to the S&P. Is S&P-X right now. S&P is down 33 at 24.76. Back into this little trading band, trying to tag the 24.93 9-period exponential moving average. It's below that at 24.77, down 31. This is the S&P down 31. It's a lot. But the MACD did cross positive, just like the Dow. The stochastic's acting well. The S&P weekly chart went under the 200-period exponential moving average in leg D, and I've called it a 5 in the Chapman wave. That's a little early to do, but I have called it a 5. But I'm looking at this and I'm saying, wow, you should be a lot worse if things were really as bad as if everything came together. So I'm calling this a rolling rotational correction, just as we saw rolling tops. So we've got a rolling correction so far. Day is young, week is young, the year is very young. 152.07 on the QQQ, down 2.81, down minus 1.82. A little bit worse than the Dow and a lot worse than the S&P. So this is going to be very interesting. Why? Because it could have plunged. I said I'd like to see 150 hold. 150 was the low round number, and it's trading at 152 right now. I'm looking at this and I'm saying anything can happen because there are these waves. There's the conflagration between the two parties starting in earnest today publicly, whereas it was background noise before. This is going to be full throttle. Ooh, ugly. QQQ needs to get to the 153s within the next week and a half without taking out the 140, call it 146, absolutely key last support before it goes down to the lows. IWM holding really nicely here. IWM is only down 0.44% at 134.07. Not a great looking weekly chart at all. It's actually quite poor. Monthly chart is terrible, but the daily chart is better than the others. Even it scraped to a leg B, a gray leg B yesterday, nominal new recovery high. I'm looking at this and I'm saying, okay, that's very nice. It's good to see that. That in a way confirms my rotational correction idea. I want to go to gold just as we were about to go to the break. Gold is up 7.5 at 1291.9. Really good action. We had We've had 4 sessions after that long-legged doji candle about 5 days ago. We've had 2 sessions below the one 3 days ago, and another new recovery high from yesterday's doji. I'll be back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So we're back, and before we go to the callers, I'm just going to say gold has actually extended. It's in a trend line. It's just bumping into resistance right now in the daily. Weekly actually took out the up channel resistance, and that monthly has improved a lot. It's still not a great pattern, but it really has improved a lot. And I would just say that we should start under normal circumstances. If gold isn't now a factor of a fear indicator, then what we're really looking at is that there should be some kind of a pullback from 1291 into the 1270s, maybe into the 1260s. But if it continues to do this, and one of the reasons why I said that is more a fear factor than anything else is if you look at the stocks, if you look at, let's go to ABX, which has been one of the best ones. Whoops, where did I go? ABX, right here. ABX is, AXB. AXB. Hey, what are we looking at here? Well, let me just go to Royal Gold for this moment. Royal Gold right here. Up in the higher register, it's leg F in the daily, and it's very strong leg B. So the gold stocks took a while to get going, and that was really my reason for saying we're staying with this dollar. But look, the gold stocks are not, wow, the majority of gold stocks, they've had a nice move, but nothing like you would have expected. 840 to 960 on something like ASA Gold and Precious Metals. You know, that's really a nice percentage. But I would have expected much more, but this is very good action. And just as we wrap this particular section up, because we're going to go to our first caller, the dollar had a fabulous session yesterday. I didn't quite understand it. I think it was because of that British pound that just got smacked. And now gold, the dollar is right on the weekly 14-period exponential moving average, 96.35. Still really good action considering what gold has done. But I am saying that even though we're along the dollar since April, this is a period where it should be consolidating, and so far it is. Well, let's go to our first caller. We've got Bob in Framingham. Bob, how are you?
Well, I'm very well, Basil, and I think I've spotted one, and I wanted to get some feedback from you on it.
Good.
The way I got here is on days like today, I say, gee, what seems to be ignoring the overall market and moving up? Good. And one that I spotted was Walmart. William,
yes.
Mary, Tom, Walmart, the discount retailer.
trading at 94.36 right now, up $1.02, up 1.09%, when the general market is down way over 1%. Very good. So
right.
what are you doing?
Today's candle stacked on yesterday's candle, even though overnight was a really bad day, probably due to the Apple announcements and their statements about things. And on any trade stuff, my feeling is companies like Walmart, they're great at managing supply chain, and if a tariff did go into place, they would just say, we're going to buy the stuff from Malaysia now rather than China, and the next time a ship shows up, it'll be from Malaysia, and they'll be all right. The candles are living up on top of the 200-day exponential moving average.
Correct.
I was able to draw just a linear trend line on the daily from, around November 9th, and then hitting the top of a wick on December 2nd, and basically hitting yesterday's close, and we're living up above that now. And it looks as though we're in a peak B. The question is that I have, is today the time to get in, or do I wait until there's a pullback to the 9-day exponential moving average and then make that run up to a peak C on a call?
So, Bob, you'd be looking not to buy, but to actually use call options?
Yes.
Okay. So if you're using call, and would you go as close as January, or would you go to February?
Actually, if you said, Bob, jump in right now, I was going to go on the 18th of January at 97.50.
Are there 95s at all?
There are 95s, yes.
But the 95s are probably trading about 3.5 or
actually
so.
a little more than twice the price.
So, So if you're wanting to trade it closer to as if it was a stock, I would prefer to be buying the in the money, well, slightly out the money, 95 calls, and go for the nearest month, which would be the option expiration on Friday the 18th, right?
Yes.
So that's the way, and then you would be moving not one for one, but you'd be moving close to as close as possible to that if Walmart by Monday is starting to trade in the 94.80 to 95.20 area. Yeah, 95.20 area. I think that would be to me the safest way to play it. The most expensive way, because it's in the money, close to in the money, and you're paying up. And the other way is to go out, and then you can go to the 97s. But to go to the 97s, I think the first hurdle to cross at this particular point is to say, this is really what I'm looking at as part of this rotational correction, even though in a sense rotational usually means it's not an even number, but generally you're looking at the general tide moving one way so that the majority of stocks are moving up and some are moving down. And if it's the other way around, in this case, the moves to the downside have been quite vicious, 600 points. And even though we've got back, we are making lower lows and lower highs in all the indices. So that says to me, I can call it rotational, but it's selectively rotational. And selectively says to me, now what you've done is you've identified a stock in a group. I'm going to go to just retail to start off with. Retail's holding quite well, but it is making lower lows and lower highs. I should also go to Walmart. Oh, am I correct in looking at it? I think it's in the XLP. I know Costco is in it. Let me just see what the XLP is doing. Yeah, it hasn't made a leg B, so it's not quite as strong. All right, so this is what I'm going to say to you. I think you've identified something that fund managers are going to look at the end of the day and say, hey, here's a stock that has not only held well, it's going against the grain. For us technicians, I'm saying, whoa, look at the MACD, how it's crossed positive so strongly with the wide beta, with the wide, the distance between the faster moving average, the 9-period differential, green line in the daily, and the red line, the slow moving average is great. And you're already at 81% in the stochastic. So yes, anything can happen in a market like this. If we close at the low of the day, tomorrow could really be ugly. Walmart will probably be dragged down a little bit, but the way I'm looking at it right now, I like it. I think at 94.11, I probably want to go for the 95s. But it wouldn't give you the same bang for the buck, but it would be a way of playing a good percentage move to the upside. Because if Walmart is able to close, not get to, but close above 94.49, that's the high of the 11th of December, it starts to go in towards that gap. And look at that gap from the 6th at 95.41 high and 95.61 low. So that would be a target for me, and I'd go one step at a time. Can you hold on 1 second? I want you to look at Costco at the same time and some of the others just to see how they're doing.
Sure, I'll hang on.
Okay, we got Bob in Framingham holding on. Dow's down 431. We're looking at Walmart. It's up 71 cents. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back looking at Walmart holding really well even now under the second wave of selling in the general market. So, Bob, what I've done is, you should remember well, I've got a technique that I call left side, right side price time match. It's the Chapman Wave methodology, where we look at the number of bars on the left and the number of bars on the right. And if there's a cup or a V-shaped pattern, you're able to at least get some kind of a gauge of how long it would take you to get back to a certain price. So the gap that I'm looking at here between 95, let's call it in the 95s, it gives you quite a bit of time but in fact, it should be shorter than longer. So it gives you right up until about the Monday or Tuesday, the 14th, 15th of January to get there. But there's also a particular trend line that I use. It's called the Chapman Wave inside wedge target resistance line. Today it hit it. And I'm looking at this and I'm saying, well, if there is a good session tomorrow, you should at least tackle the top of today's candle of 94.71. But there's a good chance that if you close near the 94.68 area today, it's at 94.11, so it's got a bit of a way to go back there. If you do close towards the upper end of the range, if there's any relief tomorrow in the market, Walmart should move higher. So that means that you're buying it now at 94.07, probably now because it's pulled back a little bit, you could get a better price on the 95. And I'm looking at it and I'm saying, you should be in the money quite quickly if this is going to work. So this is one of those that's going to give you time and it's going to give you price, because if it's going to work, let me just quickly look at the 120-minute chart, 120-minute chart. Yep, right, it's stalled right at the 200-period exponential moving average, and it's gone to A, B, C. It's in leg D in the 120-minute chart with very good technicals. 93.21 is good support. You know, Bob, I think that you could do this step by step. I'm going to suggest at about this time, looking at the 95, and either you do it now or you do it tomorrow. If there is a bit of a pullback today and it goes under 94, if it goes under 94 after you've already bought a call, let's just say you have bought the call, you could start looking at the February, because then the February will be a much better price and you've got way much more time, but you will be paying more for it. But I'm looking at it at a step-by-step move because of this particular market. If the market wasn't down as heavily as it is now, the Dow was just down 150 points and the S&P down 15, I'd say to you, you know what? I think this is going to be a great trade. At this point, you've got the drag of the market that could infect even the best. So I'm just saying risk reward, my leaning right now is towards the 95 January. And even in the next 2-3 days, if you get a pullback, you could start looking at the 97.50, I guess it is. But I would only do that. You've got to see this hold. No matter what happens, Walmart must hold 92.50 to 92.30 over the next, I'd say, 2 to 3 sessions. Hope that helps you.
Yes, it does. And there are a couple of overhead gaps up there, and that's what I'm using as my targets to say it's just going to scoot like a rabbit and try to close those gaps. There are a couple of gaps up ahead
Yes.
when you take a look at the open and closes on the candles rather than the extent of the wicks.
Correct.
And I just have the feeling there are these attraction points that are potentially going to draw.
They become magnets, right. Right. And the other thing is when I do it on my automated Chapman Wave projections, 93.69 was the resistance on the daily. It went higher than that. I've got a lot of support levels in the 93s, and the 120-minute chart has 94.66 and then 95.66 as upside targets, and the technicals are strong. So I think you're on the right track. Very nice. Good choice.
Okay, well, I will finesse it and buy in pieces and ideally go for a profitable ride. Thank you.
Good. Let me know how it goes. Thank you very much for calling.
All right.
And a Happy New Year to you, Bob. Bob in Framingham. So, folks, let's do a couple of things here. What I want you to do is I want you to just finish up. I want you to show you crude oil. Crude oil is still very much at the lows, but it's come off those lows in a sideways fashion. And it is, here's the candle that we were looking at last week. I said, with my rule of thumb, with these doji type candles, especially the long-legged candle, a close above the wick high suggests that the following week you should even have another move above that wick high, and you've turned the body of the candle, and that would be crude oil, would be the body is at 45.60s. That's your support. Trading at 96.82 right now. So far, it's not a big deal in the daily. It's the weekly that's suggesting stochastics flattening out. It needs the daily to accelerate up to be able to strengthen the weekly stochastic. So until crude oil, remember, this is the pattern we were looking at, where it's the stalk leg formation, and that B comes down, and when it turns around and goes down afterwards, because it's the inverted stalk leg formation, you've got to expect the move below 42.36. So far, it's acting very well. It's trying to get to the 47s. Let's see if it can do that. That's going to be very important for crude oil over the coming, I would say 3 days. It doesn't have to go much longer than that. TLT screaming to the upside, broke out of the weekly resistance. The monthly is improving. Daily is up at 123.45, up $1.30. I've been talking about the TNX saying, I think yields are not going to go much higher. That I think that the yields, I don't know about the Japanization of our bond yields, if it's still in existence. That was my thesis for decades. Now what we're looking at is the TNX made a high at the 32.48 level in October. 3.248 is trading at 2.583, 2583. And the way it looks, at some point it's going to try for 2508, the 200-period exponential moving average in the weekly chart. That says that the Fed, there's no way that I can see the Fed coming out and saying all our data is pointing towards a great economy. They're going to have no choice but to suggest very strongly that the data is starting to show some change. And even if there's a high employment number tomorrow, they're going to say it's the compilation of all the different data that is going to impact us. And I suspect they're going to say we're going to hold it for a little bit. If they don't say that, we're down 450 right now. We could be a lot lower tomorrow at this time. When does the Fed come out today? It's tomorrow morning. So they won't be saying anything yet, but we'll see what happens with the data. So that's really important. So the TLT is acting extremely well. It's a little overbought. Yeah, we could have a bit of a pullback. I don't think we'll have a smash to the downside because of the Fed, but definitely at 123.41, you're looking at 121.32, where it was yesterday, as being the start of support going all the way down to 120. I don't think it even has to go to the 200-period moving average in the daily of 118.60. It could just have a high-level consolidation if it needs that. That would allow the market to pop a little bit. I'll be right back. So question again, do I sell some? Do I take another third off? Let me answer that when I get back. Basil Chapman, Tiger Technicians, our Dow's down 47.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So, for quite a long time, I've been saying that the tradition, as I recall it, we haven't seen it for a long time, was that when equities start to become extremely volatile, in the parlance of Wall Street, volatile means down. They never said it was volatile on the way up, but they always say it's volatile on the way down. That's where money comes out of stocks and it goes to the so-called safety of bonds. I say so-called because bonds can also have a pretty big move, 111.90 on the 2nd of November to 123, 11 points, 10% in bonds. I mean, that's huge, right? That's like the dollar moving up 10%. Currencies to move that is huge, unless they way at the lows and they're very low priced. So in this particular instance, the question was, should I take another third off? My answer to the questioner is, if you look at this in leg D, in the daily, and if you look at the MACD making that little M-shaped pattern and the stochastic going back into the 80% area at 84% in the daily, but the weekly just beginning its move into the 80s, and the MACD good. Remember, I'm looking at this. I'm upset, very upset, because we lost our fantastic short position right a day after the all-time high in the Dow. Yeah, we made money on it, but we didn't get back in, and that's really upsetting. We are playing this bounce, but it's really, I wanted to be holding a short and doing short-term longs in between. That would have been ideal for me. Okay, not complaining. We did made money, but it's not the position I wanted. We waited and waited to get that exact high. This particular technique is a technique I'm teaching in an all-day webinar on the 23rd of January here. Go to the front page of TFNN. I'm just trying to recall now where you're supposed to go. I think you're supposed to go to Services tab. Services tab from the homepage of TFNN, and you'll see that I've got this webinar. It's going to be an all-day webinar, 9 o'clock to 12 o'clock, and then 1 o'clock to 4:30. Very intense, and I'm going through a whole bunch of techniques that we're looking at, why it works, what works. I just had someone talk about Merck using my Chapman wave left side, right side price time match. Whoops, I typed it on the chart. Let's type it into this little box right here. These are techniques that I've used for years, and they really do help. So you had, look at this massive left side, right side price time match in Merck going back decades. Going back, where did it go? Oh, there it is. Yeah, so we had a move that went from, there it is. So this cup formation went all the way to the 80 level. It didn't go to the all-time high, which was at 90, but it went to 80 in, I haven't got it on this particular chart right now, but it was in a price time match to the left side. Number of bars to the left, number of bars to the right. And that helped this person hold Merck all the way to that high. And these techniques help. I can show you another little example of it right here. intraday trading. Look, here it is, if I can find the one. Yeah, so there's a cup formation in the E-mini. It goes to a high in the 2491 area at about 9:30 or so, pulls all the way back down to the low of 2447. And look what happened. There was a little mini cup formation, left side, right side, price, time match, Chapman wave, inside wedge, and then a much bigger one, missed by a few points, going all the way to that high of 2493.50 at 9:32. It went all the way to 2489. That's just a technique. Left side, right side, price, time match. There's the inside wedge. I'll show you where to use it, how you can take it. You can measure it. I also sometimes use Fibonacci. I'll show you the way I use Fibonacci right here. If I can grab my Fibonacci tool. You don't even have to have all these tools. It's just nice to have. Fibonacci extension. So this was the extension from there to there, the first one right there. So that was the first one. And it took me right to the 161.8 area. So these are techniques that we're going to be discussing, and you're going to practice them. The whole idea here is for you to actually implement them throughout the session. We start off learning them, and then we put them into practice. And I'll show you a couple of techniques I've developed over the last 2 years where I'm using certain moving averages, how I use them to really help you stay in positions, how we've been able to stay long from April in the dollar all the way from the right there, 88.25 was the all-time, was the most recent February low of last year, and we're in at 90, and we've rounded up, and we've taken a little profit in the 96s, but 98 was hit, just under 98, it was 97.71, and now it's pulling back, still holding pretty darn well when you look at it. And these are techniques that we use. All right, so that's enough for that. Now let's get back to our story. And what we really wanted to look at here was within the context of the TLT, that's the bonds, within the context of the crude oil, not a good sign that crude oil, I've been talking about this for how long? Every weekend I show my subscribers in my opening call, I send out a chart that has the different, I call it my triple yield chart with the yields together with Wood and HGX, the home builders, and Wood is the global iShares Timber and Forestry ETF. And I've just been saying, if you put that together with the crude oil pulling back, high-grade copper now making a lower low. This is now a yearly low. Okay, not good. 2.57 went right through the 2.6s support. Boom, 2.57 right now. Made a low today at 2.543. That's crude oil. These are not signs. So I'm saying to my subscribers, get your cash, keep your cash. We will have some trades. Some will work, some won't work, but we're getting a feel now for what can work for the quarter, for the whole quarter. And I'm looking at something that is very interesting here. Why? Because yields are coming down. So what would you expect that the financials would do? You'd expect the financials to tank. I mean, that's kind of, because they theoretically, I always hear that financials need higher rates because they can get a good return. Well, look at this. We were looking with Bob just now at Walmart, holding very well. We looked at Costco, also holding quite well. Look, the XLF has gone to a leg B, 19. No, it's just a leg A, gray leg A. Technicals are improving in the daily, not the weekly yet, and definitely not the monthly, but it's a start. And it's what I'm saying is how all these different sectors, for instance, the SMHs, look at the difference now. Look at this, trying to bounce very nicely from the 22 low, just on the 26th of December, spikes up to the high 23s. But look at the SMHs. That monthly chart is still very negative. Stochastic and MACD in the weekly chart is still very negative. And this one's dipped very sharply today on the Apple News. So it's saying that this selectivity here, it's really important. Keep your cash. I think you're going to have fabulous buying opportunities. But for now, we'll still look at some positions that I've named a couple that this morning that I thought were really good. But I needed to, let's get through the day. I see it a day or two to see how they're holding. I think we're going to have some counter trend moves. And if you are a person that wants to trade, this is good. If you're looking at your portfolio and saying, what should I be doing here? Keep cash handy. If you want to start little mini positions in stocks that you've loved for a long time and they're down 35 and 40%, yep, maybe you could get longer positions in now, but be prepared. They could also have, from even this level, they could have a 5 to 7% or more pullback. So this is being very selective, I'm saying.
The secret to being successful in trading and investing is to have an untiring, undying, and unquenchable thirst for knowledge. There are certain situations where you can absolutely understand what the next move of the buyers and sellers is likely to be, or what I like to call a competitive advantage. Hi, I'm Steve Rhodes, the #1 market timer for the S&P 500 in bonds, and on Tuesday, January 8th, I'm going to teach subscribers of Mastering Probability how to use Tom DeMark's setup 9-count and trend lines, a tool that called for a change in trend at 3:30 in the morning on the day that generated the Dow's largest daily point gain in history. If you're looking for a competitive edge, then now is the time to take advantage of my risk-free 30-day money-back guarantee trial for my daily newsletter service, Mastering Probability, which will provide you with immediate access to this live workshop, which will be archived on your members page for the next 30 days. You have nothing to lose and everything to gain. Sign up today at TFNN.com.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Folks, I just got a time here. We got Hector asking about radio show NBEV cup and handle breakout setup in NBEV. So that is one of the cannabis stocks. New Age Beverage Corporation trading at 5.83, up 54 cents at up 10%. Yes, I like this, and this is exactly what I was talking about with Bob about the counter trend moves that in the rotational correction, some stocks act as this. I'm not talking about the group. The group overall, I don't think is doing this. This is acting very well. So I'm going to say, Hector, yep, if you're in it, does look like a classic cup. No, it's not a classic cup and handle in my work because the handle was too deep. Not only that, it really isn't a cup and handle. I've called it a cup and handle because it's convenient. A real cup and handle, I would have started it all the way back and on the 4th of October at 9.48. I've actually started it a little lower down to be conservative. I always like to do the conservative picture first at 7.75. I like it. I think it's going to be moving higher. Just it needs to hold 5.30. If there's any pullback, the whole 5.40 to 5.30 area is support. It is acting well. You want to look at stocks that are acting well. It did the left side. This is perfect for the Chapman wave technique that I spoke about. Look at that cup and hand, the cup formation, left side, right side, price, time match. I'll talk a little bit about it more tomorrow. Technical Friday. So yes, Hector, I agree with you. I agree with you that it's rallying, but it's got a huge candle to overcome the candle of the 21st, big move down from 648. If this can get to 6.10 and hold, probably it's going to go to 648. So step by step, the weekly chart is improving. It's not great, but it's improving. Monthly chart needs quite a bit of work. Okay, so before we wrap up, don't forget, I've got a recording of Steve from his show earlier today that he did. He's recorded it. So I'll be back with Tom a little later on. And folks, check out the front page of TFNN. You'll see my new webinar coming up, and it's going to be an all-day webinar. I do these periodically, and we have a great time. Yep, you could put some trades on, but it's really a learning experience. We're going to go through these. I want you to practice these patterns over and over, how you use the MACD, how you use the number of bars down to the number of bars up, Chapman wave inside wedge. Where do you take this line from? And look how beautifully that line showed where the resistance would be. So yeah, that's what I'll be doing, 23rd of January, all day Wednesday. Have a great day. I'll see you tomorrow. Otherwise, I'll see you with Tom a little later on. Check out my opening call, front page of TFNN.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.